We're about to give you not one, not two, but three different unusual activities that hit, and we're going to describe them for you on the show right now. Welcome back, folks. I am Jon Najarian, and the gentleman right over there is Marc LoPresti. I think you guys know who he is. And it looks like you're getting ready for happy hour already, Marc.
I am, Jon, and this was probably not a good idea, but we are at the beautiful Hudson Yards on Manhattan's West Side, attending, speaking, mingling, hobnobbing at yet another 361 Firm family office event hosted by our friend Marc Sainer. Big shout out to Marc for inviting us back again. Marc's one of the best in the biz, and the folks that come to these events, it is a curated audience of ultra high net worth investors, family offices from around the country and around the world. In fact, we're going to be with Marc again in another event in just a couple of weeks in beautiful Zurich, an incredible place to be during Christmas time. But yeah, they gave me the wine room to shoot the Rebel's Edge from. So if things get boring, I'm just going to open one of these bottles of Brunello and see how it goes.
I don't blame you. But I'd say take it easy on that, because at these events, folks, there are tens of billions of dollars in that room, and another tens of billions of dollars watching remotely to the presentations that so far have been very impressive today, Marc. But let's talk about the markets here and start it off with the macro minute. And have rates peaked? Well, the Q3 preliminary GDP came in with nice growth, Marc, the GDP, and the rates, that is the 10-year, traded down to the lowest level since mid-September, 426 today.
Yeah, that's very good news. With, I think we were talking earlier, Jon, the futures indicating almost a certainty that we're going to have a patient pause, a holiday pause, a small Christmas gift from Jay Powell instead of the cold that we've been getting from the Fed a lot this year, with a skip, no hike. And I've been saying that we were going to get one more hike this year. Thankfully, wrong. But when you break down this morning's GDP number, Jon, a lot of it came from government spending. We know that we have a government that's spending like drunken sailors on shore leave, and the consumer spending component of it has contributed to the overall GDP was actually lower than expectation by, I think, a solid point. So a lot to unpack there. Market trading up higher on that news this morning. It's cooled down, still in the green, but off of the day's highs as we go on air.
Yeah, and as regular viewers of the Rebel's Edge know, now we hit fantastic futures.
Fantastic futures.
Love that. Fantastic futures. I'm going to go right back to the 10-year mark, because lowest level since September 14th. Many of you will recall painfully how we ran in the next 3 weeks up over 5% on that 10-year. But now we're back down to the September levels, and the market's certainly enjoying the ride.
For sure. And, you know, the yield curve, we were talking about this at dinner last night with some other smart folks. After Jon, for those of you that don't know, was on Larry Kudlow's show, wowing Larry, and his insanely large viewership with Jon's knowledge and expertise on these subjects, touching on the fact that we still do have an inverted yield curve, but softening inverted yield curve. And Jon, I'll just throw in that one of the things that came up last night at dinner, that when the yield curve gets inverted, the time to recession is typically about 12 months from when that inversion happens, but it's been inverted for so long now, hard to tell. Rolling recession, I think, is what we're betting on, but let's move on to stocks.
Yeah, well, let's move on to stocks. And as promised, folks, we have some really good news for those of you who follow the work of Pete, Jon, Marc, and the team at Market Rebellion, because GameStop, GME, came up with some fabulous results. And you know what? one day ago, they were buying calls in GameStop. So anytime you get the opportunity to really run with that unusual activity, Mark, and it works out like this, bang, that's a good day.
Listen, it does pay off. This is admittedly a stock I love to hate. Anytime that I'm asked to talk about it on this show or any of the others, I just rail about GameStop sort of being, the buggy whip company with their brick and mortar still selling consoles and anime and collectibles and things like that, struggling to stay relevant in a world where gaming is going to the cloud, going into our smart TVs, etc. But former Chewy CEO, we all know him and love him. He doesn't say much on these earnings calls, but man, oh man, pulling a rabbit out of the hat, in my humble opinion, with this one. I do have a question for you, John. This looks like a classic short squeeze setup. Do you agree?
Absolutely. In fact, the meme stocks are back. And as Mark referenced, there's a lot of people, including the chairman, who love those meme stocks, Chewy and others. And GameStop made that magnificent bounce, Mark, partly because retail meme stock traders are back, and partly because of the short squeeze that those guys are once again putting the hurting on some of the biggest names on Wall Street that are short, that have sold those stocks.
Putting the hurt on the hedgies. That's what those meme guys love to do, right? I mean, I have to watch that Netflix movie at some point about the GameStop story. I haven't watched it yet, but does it mean we're risk on again? Like I think it's premature to say, because the meme stock guys may be back, and I think it's even premature to say that they're back, that we're back to risk on.
Yeah, I think it is premature, only in that the amount of stock that they bought was under 2 million shares, according to the trackers for the public that was getting into GameStop. But boy, you couple that with the short squeeze and some great earnings, and you get what we've got. Let's talk about Foot Locker, Mark. This one was slammed late last week, early this week, and now, just as our friend Karen Feinerman on Fast Money was saying, she said this was the dog in her portfolio. Well, dog no more. And we had unusual activity in this name too. It's certainly great to see that people bought in Foot Locker aggressively, and those calls, boom, to the moon.
Yeah, very impressive. Every dog obviously does have its day. Seems like Foot Locker benefiting from some holiday spending, people getting some new kicks under the tree, if these numbers are any indication. Really strong consumer spending on Foot Locker, probably some pretty good initial indication from Cyber Monday results. And look, I think this is consistent, right? This is not Balenciaga sneakers. These are sneakers that people can afford. So when you think about, what are people spending their money on, in what category, what retailers will do better than others this holiday season, consumers are squeezed. They know they're still spending. Consumers are still squeezed, and they're somewhat constrained in their budgets. So I think a name like Foot Locker, indicative of the kind of retailer that's going to do well as we go into this holiday season.
How about a different sort of retailer of a much bigger ticket item, Mark? General Motors. General Motors, folks, announces a massive buyback, and to basically get their dividend back on people's radar. All you had to do was see the millions of shares that traded in the first 3 minutes of trading today to know there are a lot of folks who will own these stocks if they're confident that they're going to still pay a dividend and or increase the dividend. And you increase the dividend and the buyback, that's another stock where we had unusual activity, Mark. Like I say, 3 of the first 4 stocks we're talking about, Market Rebellion, had unusual activity in these names.
Gotta love that, John. And of course, the dividend payers are very popular with pension funds, right? So we always talk about following the money, following the smart money. That's the kind of stock that pension fund advisors tend to load up on, right? It's something that you can be proud to have in your portfolio, paying the dividend, also, an icon of the foundation of the American economy, and getting through that auto workers strike that many thought would cripple the company as well as other automakers. But I think they reported, if my memory serves me correct, that the impact from that was only $1 billion, right? Which in the grand scheme of things, when you think about how long and how sustained that strike was, that was the only impact. Really happy to see that. That's a name that we want to see succeed.
Yeah. And here's another one, Mark. Another one, to quote our buddy DJ Khaled. QuantumScape, QS. Now, these guys have this new battery technology. What is new battery technology? There's a bunch of it, and Mark and I are always chasing after companies like this. But this one unveiled a solid-state marvel that they say has 300% higher energy density, meaning it can provide longer service, and charging in just 15 minutes for batteries like those in the EVs that Tesla has been leading the pack in. This was a game changer potentially, Mark.
Yeah, what's interesting about this, John, is it's a new version of an existing technology that's being used in most EVs, that, lithium ion that we're all familiar with. So this is a better mousetrap of a technology that we already have. So the theory being that's easier from an adoption perspective. When you talk about going from lithium ion batteries to something like hydrogen fuel cells, something that I'm really passionate about, the adoption curve there much, much longer. So really interesting to see come out. Another, by the way, company out of Norway, if I'm not mistaken, that is one part of the world, one country that is really leading the pack in revolutionizing technologies around renewable energy. This, no exception. I'm going to probably say, though, take profits on this one. I don't know how much longer this is going to stay at these lofty levels, because the reality of it is we are still a long way away from EV at scale in this country because of infrastructure. Our friend, I'll make one quick comment, John, a good friend of ours, Greg, who's actually going to be with me in California for the next couple of days, working on Celine Automotive, a company that we've talked about on the show that we love, is driving his Tesla from Connecticut down to Florida on Saturday. And I said, Greg, how many stops are you going to make? And he wasn't sure. He looked it up and said, you know what? I'm going to drive to DC and put it on the auto train. So that is an indication, right? I love these technologies. I love these stocks, but we're not quite there with EV at scale. And that's always going to be a headwind on names like QS. So if you made money, take profit. Don't stick around, try to chase this thing higher.
Always good advice to pull profits off and cut losses. Right. Doesn't mean you have to liquidate, folks, but it means take some of that money. It's your money. It's not the house's money. It's your money if it's in your account. So taking some off is a great idea. Good advice. All right, Mark, another Mark, Mr. Cuban, is apparently going to take in some partners, the Adelson family, because Sheldon Adelson, the patriarch, has passed away, but his family is still the biggest owner of LVS, which is Las Vegas Sands. And they are apparently going to put up billions, plural, of dollars to buy into Mark Cuban's Mavericks. He will still control some, but that is a big deal in sports today, Mark.
There's no doubt. I think this one took a lot of people by surprise that, this is an asset that I never thought Mark would sell. I don't know him as well as you do, John. Maybe you can text him and get a little bit of inside information on what's behind this deal. I think part of it is the appreciation, the very significant appreciation in the value of the asset since Mark bought the Mavs. And I think, what does this tell us? A bigger picture? Man, oh man, the business of sports, just unstoppable in terms of the valuations, not only of top tier, major league teams and team related assets that are, NFL, NBA, what have you, but also even minor league and junior league and other sports. It's just an unstoppable industry in terms of growth and enhancement in asset valuation. So something that we're keeping a very close eye on, and very interesting to see the Adelson family and the Sands come into this asset. I'd love to see where the Mavs are going to go from here. And congratulations to Mark on making more money. He does a pretty good job of making money, doesn't he?
Yeah, he's one of the best at it.
He sure is.
And
hey, Jeff, I'm doing a media spot. Let me call you back.
The Adelson family, by the way, folks, Sheldon made his money with CES, the Consumer Electronics Show. And then he poured that into Las Vegas Sands, and now he's pouring it into, or his family is pouring it into the Dallas Mavericks. Like Mark said, significant bet on the future of big sporting teams and so forth. All right, one more, Mark, and then we'll wind it up for today. The NBA is getting called out by Congress for basically forced labor in China. And the NBA, including big stars like LeBron and Kyrie Irving, have been defending China. Now, they haven't been defending slave labor, but if you defend China, you're more or less de facto defending slave labor. And Congress didn't like it at all, so they counted them one by one out for doing just that, Mark.
Yeah, I mean, this is an interesting story. If you are looking for something else that our members of Congress can screw up, getting involved in sports and politicizing sports, sure, that sounds like a great idea. Obviously, there's nothing good about labor practices in certain parts of the world, particularly in China. I mean, it is what it is. Obviously, a very delicate situation with China as one of our largest holders of U.S. debt and as a trade partner. We saw recently President Biden's meetings with President Xi just a week or two ago. But I mean, does Congress not have other things to concern themselves with as to whether or not the jerseys, because this is what it's about, right? It's about the merch. That's an industry thing, what we call it, merch. Yep. That it's being made in these sweatshops in China that may be using abusive labor practices. We're certainly not in favor of that, and I think we should take the other side of that argument for a second, John. I think given the prominence of the major stars, given how much folks look up to them, people like LeBron and others, maybe they should be a little bit more careful about who makes the merch and set a good example. Wouldn't be a terrible idea.
Yeah, I'm right there with you. And when, randomly one of the NBA coaches last year called out the practice, Mark, and then he was immediately sat down and slapped down by the commissioner, by his fellow NBA coaches and players, because they love that cha-ching, that cheddar that comes from all the Nike deals and all of that kind of stuff. But you're right. I think it's a moral issue. It goes way beyond just making a buck. So hopefully they're going to respond positively to being called out in a negative way for some of their accepting of practices over there. And again, not just in China. Well, yeah. Marc LoPresti, always appreciate your insights. Mark and I are going to be sharing our insights, folks, with this group at 361 here in New York City. Again, tens of billions of dollars in the room, a lot of money watching around the world for some of these emerging companies. And we'll be talking about those on our Venture Minute and a whole bunch of other programming that Mark and I will be bringing your way. But for now, we'll say adios. We'll see you at 1 p.m. tomorrow, Eastern Time.